government treasury bills were oversubscribed by 75% to the tune of 5.06 billion cedis. According to the auction result published by the Bank of Ghana, participation of the 91-day T-bills was almost to the tune of 3 billion cedis. Here's more in this report.
Investor interest in the short-term securities continue to soar since that market is the only source of borrowing for government for now. The amount raised by the government is the biggest in over 1 year. According to data by the Bank of Ghana, the 91-day and the 364-day bills recorded immense investor participation, whilst the 3-month received bids of about 2.93 billion cedis. That of the 1-year bill received bids worth a little over 1.46 billion cedis. All the bids were, however, accepted by the government. For the 182-day bill, all the bids of about 665 million cedis were accepted. Meanwhile, interest rates retreated further for the third week running. Whilst the yield on the 91-day T-bill went down marginally by 0.12% to 35.54%, the 6-month bill also fell by 0.16% to 35.84%. The interest rate on the 364-day bill also stood at 34.12%.
Patrick Edem-Agama is head of trading at Republic Securities. He joins us with some analysis. Good to see you, Patrick. So that was some good showing. 82% oversubscription last 2 weeks and 5% last Friday. What are the implications for the government and the investor?
Well, what it means is that there will be more pressure on governments to pay back in 3 to 6 months' time. But that is also at a time where the government is relieved of some pressure from the debt exchange. So we are confident they should be able to gather enough to pay back in these times.
All right. And the other thing has to do with the interest rates. Last 2 weeks, the interest rates on the yield curve fell marginally but remained high. I'm reading again that it fell last Friday. What is it looking like and what are the factors at play?
Well, it is quite evident now that the Treasury bill is now the only instrument that investors track. So if you look at the 364-day bill, it fell by 141.06 basis points. That was quite huge. We've not seen this in a very long time. It should tell you that investors also are beginning to sense that interest rates will fall, and hence they are pushing more money to a long-dated instrument like the 364-day bill. So we expect this to continue. The trend will continue until interest rates falls drastically.
And on the capital market, as we make the switch, we understand the high demand for shares of Total Energies and Benzoil Palm are expected to drive the stock exchange this week. Bring us up to speed.
Yeah, so as we are seeing on the market, there is less interest in the financial stocks, and we are seeing equities like Unilever, MTN, Total getting a lot of demand. And we expect this to continue. And when there's more demand than supply, definitely the price will go up. The exchange rebounded strongly to about 0.76% in terms of the negatives. We expect it to continue this trend until we hit the positive. So if this continues, that should see a rebound closer to what we are expecting than what we saw last year.
All right. Thank you, Patrick Edem-Agama, head of trading, Republic Securities. Enjoy the rest of the day. Well, let's...